I'm Charlotte McLeod with the Investing News Network, and here today with me is Jim Gallagher, CEO and President of North American Palladium. Thank you so much for being here today.
Well, thank you, Charlotte. I'm glad to be here.
And we're here at the Denver Gold Forum. I got a chance to see your presentation yesterday. You described the company as a turnaround story. For those who might not be familiar, can you give a brief explanation of what you've done to return to profitability?
Sure. I mean, the company has a 25-year history, and some of it had good performance, some of it had some really tough times. And starting in 2010, the mine advanced a project to put in a mine shaft to access the deeper ore body. Unfortunately, at the same time, the mining industry had a lot of bad projects. This unfortunately was another one. It wasn't properly engineered, it wasn't properly managed, and it basically spent the budget with only half the scope being done. So the company had run out of money. They tapped the equity markets as much as they could. So in 2013, Brookfield Asset Management, which is a very large Canadian holding company, stepped in with a $130 million US loan. That allowed the company to finish the shaft project, and I joined late in 2013 after Brookfield had stepped in. Given the troubles the company was having and near the edge of bankruptcy at that point in time, I think Brookfield being behind the company was certainly part of the reason that I joined and gave me confidence to join. And by 2015, there were still enough challenges. The company tripped a couple of financial covenants. Brookfield stepped in. Took full ownership of it. So in that time from 2013 until we really started finally making money again in 2017, we fundamentally changed the mining method. We did not have a backfill plant. It's one of the things that didn't get built when they ran out of money. We changed the mining method to adapt to that and are currently doing a lot of mass mining and a sub-level cave or a version of a sub-level cave mining. We've certainly changed out the whole team on site. And have a very strong workforce and have changed the culture and the attitude. We've fixed our tailings and tailings management, which was really hand to mouth at that point in time. So there's a long list of engineering, technical issues, people, motivation issues, culture that we've worked on. And the biggest sign, just last week we learned that we have won the Workplace Safety North Ontario Safety Organization President's Award for Safety Excellence for last year. So we're really proud of that. And I think that's a leading indicator of good management is when you have good safety systems. So it's been a full team effort and a lot of hard work and continued financial support from Brookfield to get to the point we are today, making substantially more money and returning a lot of that to shareholders.
Right, you do have a focus on returning money to shareholders, stability, things like that. Can you talk a little bit about that?
So we made over $100 million in free cash already for the first half of this year. We've returned $34 million of that to shareholders. So that's quite a unique story that a mining company actually does return that much. Part of it's driven by the fact we have an 81% shareholder who is looking to get their capital back from their original investment, and that certainly drives some of that behavior. But I think we've also looked at the market. A lot of mining companies, when they have money, are looking to do mergers, acquisitions, which tend to scare off investors because of the poor track record that some of those have had. And there are a lot more of those, and this is factual information, have been value destroyers and not value creators. So we, at the board level and the discussion, decide how do we distinguish ourselves, and it isn't being another mining company doing mergers and acquisitions. It's actually paying a dividend and paying it quite a substantial one. So we will be generating really good cash moving forward, and we're going to be setting some really interesting numbers when it comes to return of shareholder money.
Right, so you've got a lot of good things going on. You did mention yesterday that you see your share price as being on the low end compared to your peers. What do you think would change that, and what's the cause behind that?
So there's a couple of reasons. Palladium is very unique. It's a smaller market. Most of the world's production, almost 90% of it, is as a byproduct. So there's not a big shareholder base as there is obviously in gold that are interested in the palladium as a play. So that's one of the things. There's a very small investor base that actually got palladium or PGMs in general on their radar. We do have an 81% shareholder. We do have relatively low liquidity in terms of stock on the market that makes it harder to trade. And so that's a factor that keeps it down. And until recently, we had no investor or analyst coverage. We now have 3, and we think that's going to change as we move forward. So I think as our story gets recognized, Brookfield is committed to selling off more of their position. Their fund is not a long-term holder of assets like ours. And so they sponsor a turnaround and then want to exit and redeploy that capital, but exit in a responsible manner. So I think you're going to see a lot of dynamics with our stock moving forward, and hopefully it'll re-rate to reflect the cash flows and the dividend that we're paying as we move forward.
You said they'd be selling in a responsible way. Do you have an idea of what that exit would look like, and are they going to be selling part of the position, the whole thing? Do you have a sense of that?
Well, there's only certain sizes that you can. We did a secondary earlier in the year, and that was 10% of their position. So I can't really comment on how large that may be. We're going to test the market, see the level of interest. We are getting interest out of the show because the dividend is kind of like this headline that most people haven't yet seen, and it is drawing some attention. So I think we are committed to obviously marketing the company here over the next couple of months. So we'll see how that plays out.
And how does the palladium price factor into all this? Where do you see it heading?
Well, obviously, we are a primary. 90% of our revenue comes from palladium. We do have platinum, gold, nickel, and copper, but palladium is obviously predominant. So we will be very closely tied. Our all-in sustaining cost, even this year with a fairly aggressive build and development program, is just over $800 so far this year. And we expect that to be in the $600 range plus or minus when we finish this expansion of the underground up to 12,000 tons a day. So we will always have a good margin, I think, moving forward, even if the palladium price comes off quite a bit from where it is today. But we basically have about 100% margin today. So we are very much tied to the palladium price. There's no question about it.
And I assume since you're not interested in mergers and acquisitions right now, you're going to be keeping that strong palladium focus.
Yeah, absolutely. We're very focused on our greenfields and brownfields exploration packages. So it's that kind of organic growth that is really on our list. We expect we have a $20 million exploration program, and we really only started in the last 2 years spending real money on exploration. And from our presentation, you see we have a number of new ore zones that we've discovered around the ore body. A lot of surface material that's quite interesting, and we have this Sunday Lake deposit, which is actually closer to the city of Thunder Bay. So all of those bode well. We're probably going to increase our budget a little bit next year and spend time, money, and focus on those exploration plays.
Yeah, I was going to ask what immediate or near-term catalysts investors should watch for from you.
Well, we are on, it's a fairly aggressive in some people's minds, and not in mine actually, ramp up to 12,000 tons a day. So that's underground. That'll produce higher grade into the mill. We do supplement the underground feed now with low-grade stockpiles, and that'll make us the largest underground mine. We actually see upside to that. So I think palladium price and our mine performance are both expected to improve. And the palladium price is another good story, I think, moving forward. There's certainly some upside there, and that definitely can be a catalyst. But us hitting our targets that we've expressed, we're going to get as high as about 280,000 ounces. And so we already have some things in the near future that we're executing on already that are catalysts.
Okay, that's everything for me, but do you have any final words you would want investors to be aware of? I imagine you do quite a bit of education since it's not the best known precious metal.
Well, I'll make a few comments about the palladium market, because you're right, it isn't well understood, and it's actually a simpler market once you do pay attention to it. I mean, zinc or gold, there's so many other factors and applications and uses. We are 80+% of palladium goes into catalytic converters in cars. So it's obviously tied to the auto market on a global basis. But what has really changed, which most people don't understand, is that there has been a step change in the palladium loadings in catalytic converters to meet new emission standards and a much tougher testing procedure. And those two combined are leading up to a 30% increase per car in some jurisdictions of palladium. So even though the auto market this year is actually off quite a bit, perhaps 4 or 5%, China leading that, palladium loadings are higher, and so that's still driving this high demand. There is a market deficit, and so we've pulled the palladium from all of the sources. Everybody that's got a storage, ETF funds are at low level. So it's a tight market moving forward for the next couple of years. So potentially, even though we set records last week at over $1,600 closing price per ounce US, we expect that price is going to continue to go up, perhaps for the next 2 years.
One final question. I know that substitution between platinum and palladium can occur. Is that happening now? Because I know palladium is much higher priced.
Yeah, so it used to be, catalytic converters came on in the 80s, and they were quite simple devices and were probably only a fraction of the emission control they are today. And at that time, they actually did swap back and forth a little bit, depending on price. But they have thrifted, 25 years ago, it was 6 grams per vehicle. It got thrifted down to 3 grams and probably 10 times better at managing pollution. But that's moving back to 5 and 6 grams, and that's the real things they've done to change that is they've moved the catalytic converter as close to the exhaust as they can. It's very hot. The higher temperature, the better the catalytic reaction, if anybody remembers the high school chemistry. And palladium actually performs much better in that environment than platinum. So you cannot take platinum and put it directly in the current design. I think there will be a bit of a balancing out of the two as platinum comes in, or as platinum security of supply becomes a bit of a concern. You will see some substitution, but it's going to require a redesign. The other key factor is the platinum market is actually smaller by 20% than the palladium market. So you can't have a big move into a platinum market that's only in slight surplus right now. Otherwise, the platinum price is going to go up. And so from a price point of view, you're really not going to gain anything. And from a technical point of view, it's tough to switch and achieve the same results from an emission standard point of view. So it is not an easy thing to make a direct substitution. So I think there'll be a bit of a balance, but wholesale change is just not going to occur.
Okay, well, thank you so much. I'll leave it there. Once again, I'm Charlotte McLeod with the Investing News Network. This is Jim Gallagher with North American Palladium.